Good morning. Monday. So I see just more indecision. I don't know when it's going to end, but I started with this screen. It basically shows everything at resistance or support or sideways. Crude oil broke down 2 weeks ago and retraced back up. It couldn't even follow through down to the bottom of the range. But everybody's focused on interest rates. Excuse me. 13-week, with the banking debacle, that fell down and it's popped back up again. So still indecision about that, but that's been tempered as far as continue up higher toward over 5%. The 10-year come all the way back down to major support. You see the line chart here. That's in a trading range. The 3-month versus the 10-year, these different yield curves all historically pointing toward recession. Markets don't seem to care. Maybe it's different this time. It doesn't matter that hundreds of thousands of people have been put out of work, but so far, markets aren't giving it up. So this morning, interest rates, the 10 years up a little bit. You can see that little green dot there at the bottom. So maybe that's going to lift up. How the markets will react to that, I'm not sure. Back a while ago, was looked at as wasn't welcome, and the markets would lower. So while this is up a little today, markets are actually up. See the S&Ps. Well, this isn't moving. But you can see the trading range that the market has been in now since May of last year. And this 4,000 strike in the S&P, which has the large open interest, and it actually increased from what I see from last week. Not a lot, but it increased. And that is what's pulling this market back. Every time it moves up a bit, down a bit, it comes up there. And so I don't know what's going to crack it. Some news, I suppose, and the banking thing, other than killing the bank stocks, financials, anything from a brokerage firm to an insurance company to a bank, they all went down. Junk bonds, flattish, doing nothing. Our internals, breath is terrible, but it's because you've got a few stocks going up. We're back to that. That's the way it was a couple of years ago, where it was the FANG stocks and some tech stocks. Then they all fell apart last year. But some of those are going up. A lot of things aren't. So breadth is still below the zero line. Sentiment is dead neutral. So there's indecision there. Here we have a downtrend. So that's, get my little drawing thing here. I don't know, do this. Here we have downtrend, lower highs, lower lows within a sideways trend. So I'm going to get back up where the upside would be a big improvement from the bullish point of view, but it would still be in a trading range. And at that point, would it roll back over or would it break out? So who the hell knows? So indecision. Volatility index whipping back and forth as it has. A lot of indecision. And on this chart, this was part of the video over the weekend, is that here's this sideways little consolidation that you can see going on there, and you can see the cursor going by. And I've kind of drawn out is it a head and shoulders top? Question mark. Or will it flip back up and get through this level? Question mark. So the theme here is that, look, no matter where we look, there's indecision. So certain things are moving, and mostly not. So the dollar, smaller trading range within this bigger trading range. So as we look at this, it's like, well, does this roll back over or does it flip back up again? Do these interest rates start to push higher? So you should have an alert up here. You can see around 3.6. Does that start pushing up or does it go back down again? So these are some of the things that we don't have to stare at, but setting some alerts so the computer can watch it to give us a heads up that, interest rates are moving down. What's going on? Where is that going to lead me to, what opportunity or where are there extra risks? Does the dollar start get above these highs where gold, you can see gold is now pulled back from this resistance and it's had a little bit of a down day. But if this starts to come down, well, this gold could break out and vice versa. Oil we saw broke down, but so far, just retraced back up a little bit right into resistance. We'll see if that continues to have a little bit of a reprieve from there. That was the takeaway, just going through the majority of things over the weekend. And there, over the video, I went through not plenty, but there's some really decent looking bottoming patterns in some ETFs and sectors that could do well, but they just haven't moved yet. So that's what we're waiting for, really, to see what's going to move this market out of this trading range one way or another. All right, so it was interesting that semiconductors didn't have the green day on Friday like everything else did. As the banks stabilized just before lunchtime and started to move up, institutions felt like, they're not going to drop today. And, the buying started and it was just that slow grind, boring grind higher throughout the trading day in the broader markets. But semiconductors, which have led, didn't do anything. So that was a little unusual. As the markets moved up, we'd have thought maybe semiconductors would have pushed to a higher high, but it's just back and forth with bars overlapping each other. So just another message of indecision. The S&P, look at that mess. My God. Overlapping bars and tails and wide range bars. It's like, the move down and it's like buyers come in. It's like, hey, like one bullish guy or Kit's on the phone with another, he goes, hey, you see what's going on here? Wake up. And they all, take the offer and rip it back up again. And then, this was news on the chair, the Fed chair guy talking. And it's like, hey, see what's going on here? Get the guys together. Let's flip it back up. And so wide ranges and whips and, the moving averages starting to come together, suggesting maybe we're getting closer to some break in either direction. Who cares what it is, but some break through to get out of this mess that's going on. Yes, Sam saying a possible number of W's, and one of the themes that I wrote and spoke about were these W's with mini climactics. What's a mini climactic? Well, it's really a common sense way of looking at things, and there's these patterns that were going sideways, not quite so tight, and they went down and they did some kind of little retest. And it's a mini climactic because it had an initial breakdown. And while these could pop up, if the markets pop up, they're low odds setups. Whereas if you have what we call, I guess, a regular climactic where, something does this and it does this, and then maybe go sideways for a while, and then it does that vertical drop. And then you get the retest. That's a great kind of climactic. And it usually happens near some support. So things are extended at the end, well, theoretically at the end, sellers throw in the towel and it just waterfalls down into support. it forms a pivot. Then we get our dot and then a retest, and that's a good setup. Whereas what we have now in a lot of these are initial breaks, not the end of a move, the beginning of a move, and these retest patterns. Not exactly like this, but something like this. Right? This is only a 15-minute chart, so where it came down real hard, and then it kind of bottoms out a little bit. And you should expect the next leg down. Yeah. So here we are. This mess. SPY is gapping up to the top of resistance there near 4,000. And so if we go to SPX now, it's gapping up around here, give or take. That big open interest. Average has been about 70 points. So, but it's gapping up here. So half of, almost not half, but a bunch of the 70 points, this is the average range lately, would have to take it up here to 4,043. And the premium in that area to get above it for what we'd say is a no-brainer. The best you're going to get is 4040, right? Gamma above. Gamma meaning meaning above these numbers, you're saying, McGraw, momentum could pick up. These option guys, they don't know how to speak English. They got to use these fancy Greek words. Or stall. Or stall. Make up your mind, man. So when we when we look, I have to joke. McGraw knows that we love him, and I have to be a bit of a joker sometimes. All right. So McGraw knows a tremendous amount gamma. I know how to look to the left. All right. So what he was sharing with me in the green room here was that there's gamma at 4030. Right. So 4030 eyeballing that. Let's say that's here. All right. 4050 should hold. 4050. All right. 4050 is about here on the downside. So he's saying, well, it's here. It's where I have this little box here. That's about 4050, give or take, right? All right. And he said 4050, which is here, and 4060. Now, what we find when we look at these gamma levels that these big brains come up with, sometimes they get it right, meaning their gamma levels end up at an area where there's a pivot high, right? So they look to the left. Rather than look to the left, they go through these mental masturbations with all these measurements and Varna and Vega and so on and so forth. And a level will match up with that. So what we look for, right, are resistance points and support points where things have been rejected. So we know their buyers and sellers are going to show up there. So we see in this area over here at 4040 and 4040, right, which is between those two gamma levels of 4030 and 4050, right, you know that pivot high is going to be an area, if prices get up to it, where their sellers are just going to be waiting up there. And so down below, that's 70, that area down there, 70 points down there, 38.95. Jake is telling me 39.30, which should be an absolute no-brainer if there's really juice down there. Is there juice down there? 30. There's nothing. Oh, they cleared the quotes in TC. If there's juice at 39.30, yeah, I think that's right. I was looking. Yeah, I had 39.25, but that probably isn't there anymore. So 39.30 So starting from up here to get down there, I don't think this is a no-brainer day, to tell you the truth. You know, we have indecision. It's gapping up here. It could get up there. Right? So it's gapping starting here. It's gapping near this resistance. To hit that would be relatively easy. That would be relatively easy. Going down to 39.30, starting from here, isn't out of the question. So that's relatively tight. That's kind of tight. I'd be not so anxious. Neither one of those are no-brainers. So we'll see which way it goes. All right, let's look at the others quick. Let's clean this up. And when I think it's a no-brainer, I tell you, I don't think that's either one of those are no-brainers. This is a mess, right? It's just a big old mess, you know. Waterfall decline into support. It breaks through it, greater than 100% retracement. It stabilizes. It's still a mess. NQs getting rejected, getting rejected. Buyers are not giving it up, but it's a mess. And well, the Dow, grinding up toward resistance here this morning. I mean, from a swing trading point of view, this is untradeable, right? But the weekly should turn into a sell setup. I mean, the more it retraces into this red bar, the more that belief has to dissipate. But right now, this would be waiting for some type of a shock bar or some kind of red bar to roll back over again. And we're just in a tight trading range. Look at mid cap. Okay, that's what I'm calling a mini climactic. There's lots of these out there where a vertical move happens from a consolidation. Remember over here, this is where the markets were ignoring. You go back and we were to look at some of the bond market activity that had made the markets go down before. The markets were ignoring it. And then all of a sudden, equity markets woke up and they said, holy shit, you know what's going on here? We've been ignoring this. Like, who didn't set the alarm? And then, oh, boom, down it went. And so now you got this little mini climactic and this W pattern. So we could get some kind of bounces out of here. They're at support. But look at that weekly chart. That's like a lot of the banks just waiting for the next shoe to drop. They're short-term extended. Oh, be nimble. Transports, kind of, at support, down hard. We'd have to see some kind of monster attempt to rally, or just one big giant bar coming off of these lows. That could be impressive. Look at the Dow. You can see that there. It's just terrible, the bottom of the range. There's a lot of indecision. We got interest rates perking up a little bit. We looked at this on the other tabs, techno fundamentals. The dollar pushing up a little bit, but everything's just a mess. We looked at crude oil, bouncing off mini climactic kind of a pattern, and Bitcoin, well extended. It cleared resistance, so that's one of the better looking things out there. Well, it ain't gonna be easy. So, all yours, Dan.
Good morning. Well, if things aren't going to be easy, good thing we got Sam. I am back with us. Welcome back. And yeah, I agree. Are we going to get another shoe to drop to make these go lower? This Wednesday, MT. Yeah, can you hear me? Sound check? Okay. Oh, you're questioning my microphone? I'm still out of town. Yes, I have my headset on. It's the one that Greg usually says sounds better than my beautiful Yeti. Yeah, it's just a headset for this morning. So I think the fact that we temporarily are shrugging off this last Wednesday's shellacking. I mean, you can see the spiders here gapping, we're gapping up to, this is Friday, to Thursday's high. Okay. So it's bullish. I think it's a bullish short-term bottom. And even though, as Greg said, we wouldn't trade these index ETFs for swings because they're a big pile of mess, we found many beautiful setups. And so as long as the broader markets are not falling and they're stable and up a little, then I have no problem moving forward with these bullish setups. And so let's go through as many as we can. What shoe? Well, the banking stuff. I think the only two. There's a couple of shoes that I think could drop. Fear of the banking crisis worsening and the government's attempt to bail it out, kind of gets out of control. Inflation, so the Fed just keeps rambling about higher rates regardless of the banking crisis. And number three, could be some international incident with China, Taiwan, Russia. So those are the three big ones, and then earnings, of course. But those are the major shoes. All right, Costco here. Sam mentioned I like this as a put spread. So let's check that out, Sam, at the open. Ideally, 30-minute high would be great under Thursday's low. Greg got into a BBV Friday. Inverse head and shoulder with a price void. So yeah, that sector is doing well. The PGs, the CAGs. Here's a big old bottoming pattern that has room to go. I have a couple put spreads here on these double bottoms that you all were talking about. XOP is one of them. It's gapping over Friday's high, so that's good to go if you get filled. General Motors. Now, I was a little reluctant. This is a double bottom by definition. It is one. We say that they all come in different flavors. So the only slight question I have on this is Friday was not what we call a potent reversal. It was a minor reversal. It's a green bar, but it is gapping up. And if the markets are going to hold, it's down a lot here from 43 prior low. So that's a put spread. X. See, that's a better W bottom because it's a more potent reversal and support in the 200. So that's a put spread. It's gapping over the entry. Same with SLX as the ETF. I mean, I would have done a put spread on this, but the spreads are ridiculous and X looks better. Stolled, I also would have done, but they don't have weeklies. Amgen is gapping up, another big bottoming pattern that we've been watching this for 2 weeks, or I have. And we talk about an event, a something bar. I'll watch you for 2, 3, 4 weeks, and Friday was the bar. It's a small gap, closing breakout. You got to climb on the weekly. Look at that, climb on prior support. If you believe in technical analysis, which we obviously do, Friday was the day to hit the button or do a half lot Friday, half lot over Friday's high today, which is what's happening. All right, so I got alarms on all this other stuff. We'll review. Let's just go down here. So KRE Regional Bank. Let's say that's a very sloppy W bottom because you got so many overlapping bars here, but the fact that it closed deep into Thursday's bar after a negative gap was the start of a short-term bottom. And I actually did look at a put spread on this one, but didn't like the pattern, and it's still in the middle of news, and thirdly, they actually sucked the juice out more than I expected. This frick, and everyone's kind of been speculating that this was the next one to get its head chopped off. It's a nice gap with a monster void. So let's watch that for a day trade. I have it here in the bottom right. IAI, insurance industry, another sloppy as can be, W bottom. But what I do like is the volume on Friday at this prior low. So it could be the start of it. On this AI, we have a covered call. Team, we have a call spread open, same with Twilio, so I got alarms on both of these. Here's the bank that got finally bought. I'm sorry, bought SVB. And I typed in the green room earlier. I just have no friggin' fundamental explanation of why this thing's up 50%. I mean, they're buying a troubled bank. Okay, well, that's assets minus liabilities. Your net worth is the same when you buy something, right? You buy a bicycle, a car, you got an asset, and you just change two assets. So I think somebody got it right. I mean, the only human explanation is their equity is improved by the purchase, which is code for another type of bailout of some sort. Of dumping on maybe the FDIC or Fed or whoever, the Treasury, all three of them kind of combine their powers. They're talking about buying back bonds at par. So what that means is that's what got these banks into trouble. They bought these bonds. I heard Rick Santelli giving the numbers, or somebody giving the numbers. So let's say they buy them at 102, and then now they're worth 80 cents. So you got a 22% haircut, and then they're saying, hey, all right, I got a bunch of alarms going off here. And then they're going to the window saying, oh, give me 100% of the value. And that's what the government's doing to provide stability to the sector. All right, let's so CCL had earnings today. That looks like a short-term bottom, gapping over last week's high with a void. That looks very interesting. For put spread and 30-minute high directional. All right, let me look at these alarms that went off and tell our weekly options trader. So XLP is fine because we're only going to get filled in the gap fill. General Motors is fine. X is fine. So I'll send out a telegram. AI low alarm, but we have a covered call. JP Morgan. Oh, that is way, way too ugly of a pattern for me. Wow, that daily chart, it's ugly. All right, man H. Man H is triggering cleanly. So I will post that. CAG triggered. Zulu Sierra triggered. Let's see, was it a clean?